Fuel costs, okay. If you have an actual, so the definitions that we have to keep in mind here, allowance needs there to be a receipt of cash by the employee. Now, in this case, we're saying the employee never gets the cash because think of this like an employee having a garage card or a credit card to pay for petrol. So that absolutely, I agree, it's not an allowance. But what it is going to be, it's either going to be a payment of my debt in terms of para 12, or it's going to be an employer provided petrol card. It would be a payment of my debt if it was my petrol card, which my employer just settles, but it would be a free or cheap asset under para 5 if it was the company's petrol card that I was using. Why is that distinction important? Because if it was an allowance, I would need to submit proof of the expenditure incurred in order for it not to be taxable, right? If it was a payment of the employee's debt, right, I've also given you 2 additional guides there that you can go and check some detail on. But if it's a payment of an employee's debt in terms of para 12, then that entire payment is always going to be a full value fringe benefit to the extent that my employer reimbursed me. If, however, the employer gives me a petrol card, then the standard value would be the amount paid by the employer, unless it's a petrol card that is linked to an employer provided vehicle, in which case then the fringe benefit is null. Why? Because it's actually taken into account in the right of use calculation. Okay, right. So what do I have to take into account when I'm considering calculating a fringe benefit on the car value? What should be included and excluded? If you want to go, okay, I will be honest and say I had to suss out a little bit what the individual was asking in this question. Okay. Are they asking, do I include the petrol card, do I include the fuel cost, the license fees, the repairs and maintenance, all that stuff? Or are they asking, what value do I use for the vehicle? Right. On the assumption that the question is asking, what value do I use for the vehicle? I have to use the determined value per the 7th schedule. The determined value, now please bear in mind there is a transitional provision, although that's mostly scoped out. As it currently stands, the determined value per the 7th schedule for your average company is going to be what the employer paid for the vehicle, what's on the invoice, and that's it. Now, the question of whether it's VAT inclusive or exclusive is going to depend on whether the employer could claim the input VAT or not on the vehicle. So if it's a bakkie, it would be Veneta VAT. If it is a double cab, it would be VAT inclusive. The guide again goes through that detail, goes through the varying stages in quite a bit of detail. If you're a car dealership or if you're a motor vehicle manufacturer, there are some slightly different rules that apply to you. Again, please go and have a look at that guide to go and see what ties in. So the most important point is it is the cost paid by the employer for the vehicle. That's going to be true for 95% of the cars. Okay, if you want additional information, as I say, double check the. Um, okay. If there is a maintenance contract included, right, then then that doesn't change the determined value. The difference is if there's a maintenance contract included, then instead of using the 3.5, you use 3.25 as your percentage to calculate your fringe benefit value. Okay. Ugh, this one. When they changed Section 101Q, the number of people who, yeah, again, this was kind of like employment tax incentive schemes where the amount of avoidance schemes was actually frightening. If a company is reimbursing their employees for school fees, then more than likely this is going to be a payment of an employee's debt per para 12, whatever the face value is, that's a fringe benefit, right? However, if there is yeah, okay. I'm sorry, I'm seeing comments about the missing slides. I'm going to apologize on that front. This is possibly a save issue on my side in terms of what I sent on to Adele. But you will absolutely 100% get the final slides by the end of this. Okay, you will definitely have the final slides. Coming back to this is if there is a 10Q, if there is a genuine bona fide bursary scheme, then per section 101Q, a portion of those bursary, a portion of that repayment could be exempt when I do my tax return. However, I just need to make one very blanket point. In order for something to be a bona fide bursary scheme for employees, it needs to be properly administered as a scheme. It needs to be available to more than just employees. It needs to be publicly available. And there needs to be criteria for how you qualify. And being an employee can't be one of those criteria. So there were a lot of people who set up these bona fide bursary schemes, which really aren't bona fide bursary schemes, where that payment of the school fees should actually be just a straight fringe benefit with no Section 101Q if you're paying for the kids.